Forex trading is not easy. This is why so many fail in this business. Some people think forex trading is easy. Some think it is bed of all roses. But the truth is, forex trading is not easy. And in this video, I'm going to be sharing with you reasons why so many forex traders fail in this business. Honestly speaking, so many traders have failed so much in this business, and that is why I keep telling you that for you to survive in this business, you need to have a mindset of a forex trader. So many newbie traders, beginner traders, believe they can make 80% of their trade accurate, not understanding that the forex market is uncertain, it is unpredictable. So for you to become successful as a forex trader, you need to think like a forex trader. Some newbie traders believe they can become rich and wealthy within few months, forgetting to understand that forex trading is a business that grows. It takes time to become rich. It takes time to achieve wealth in forex trading. So I'm going to be sharing with you reasons why so many traders fail in this business. Number one, lack of capital. So many traders enter into the market without enough capital, thinking they are going to make millions. If you don't have enough capital to trade the forex market, you cannot become a millionaire. That is the truth. Forget about all the propagandas. Forget about people telling you can flip $100 to $10,000. All those things are just crap. You need money to make money in forex trading. That is why capital comes in. So if you don't have enough capital, just have it at the back of your mind that it's going to take you a long time to become successful. Why? Because you need to manage your money. So why some traders fail is over leverage. They don't have enough capital, but they are over leveraging, using lot sizes that are way too higher than their capital, and before you know it, they will blow the account. So lack of capital is one of the major reasons that so many traders fail in this business. Number two, not getting to know the market. So many traders do not understand the market that they are trading. They just jump in and jump out. Some are gambling. Some are just placing trade randomly with the hope of the trade going in that direction. So many traders have lost their account because they are just trading based on what? Gambling. They're just trading randomly. Right? They just place buy. If their mind say place buy, they will place buy. If their mind say place sell, they will place sell, without looking at the market structure, without understanding the market condition. So if you want to become successful in the forex market, you need to understand the market that you are trading. If you are trading gold, you need to understand how the gold market moves. That is why you need to take our time to master price action. You need to look at the chart and know what is going on. Is the market in a trend? Is it an uptrend or downtrend? Is the market ranging? If the market is in an uptrend, then you know that you need to buy. If the market is in a downtrend, you need to sell. And if the market is in a range, then you know that you can buy and sell. You buy at support and sell at resistance. So understanding the market, knowing what the market is doing, can help you to become profitable in the forex market. So many traders fail because they don't understand the market that they are trading. Number 3, Having an aggressive mindset. So many traders, especially the newbie, come into the market with the hope of making money faster, and that leads them to one, over leveraging, taking too many risks, taking so much risk. They trade without stop loss. They trade without even thinking. They are so aggressive. This type of traders will not last in the industry because they will keep on blowing account all the time because they are too aggressive. So for you to survive in this business, you need to be calm. You need to use lot size that befit your capital. There is no need to be aggressive. There is no need of chasing the market, trying to gain everything from the market. There is no need of trying to make all the millions in the market because at the end you get hurt. Having an aggressive mindset will not help you to become successful in the forex market. Rather, it will drain your account and destroy your capital. Number 4, lack of risk management and money management. The next reason why so many traders fail in this business is lack of risk management and money management. So many traders fail to manage their risk, fail to manage their money. They throw lot sizes that comes to their mind, forgetting that forex trading is all about money. You use money to make money. So if you throw your money away, the market will take the money. So having a sound money management and risk management will help you to become successful in this business. And like I always advise, don't risk more than 1% or 2% of your trading capital, because if you lose your capital, you cannot trade. If your capital gets exhausted, you can't trade. Why? Because you use money to make money. So why not manage the money that you have so that you can be able to generate profit with those money? And if you make mistake, please, if you make a mistake, try to correct those mistakes. If you use a big lot size and end up with a very negative drawdown, it is advisable to reduce your lot size so as to minimize risk, and then take out time to recover your losses. Don't go for revenge trading. Don't try to recover all your losses in one day. Just take time, right? Take time to recover your losses using at least 2% or 1% of your trading capital. Because if you go all in one, if you try to be aggressive, you might lose more. So having a sound money management and risk management is very important. So many traders do not even place lot size. Some place lot size at a very long distance. Some place lot size of 100 pips, 200 pips, even 500 pips, with the hope that the market cannot get there. So it is advisable that you have a good money management skill, a good risk management skill, if you truly want to last long in this business. Number 5, greed. So many traders are so greedy that they want to gather all the money in the forex market. They want to gather all the money. They are so greedy that they are not contented with what they have. If they make 40 pips, instead of closing the chart, they will want to make 100 pips, and before you know it, the market will reverse and hit their stop loss. So it is advisable that you have a specific take profit target and don't be too greedy. Once your take profit is achieved, you close for the day and continue the next day. Don't try to gather all the whole money in a single day. That is not how you become wealthy. You become wealthy by compounding your profit. As you are compounding your profit, that is how your income, your money will be growing. You don't become a millionaire overnight. So you have to make small profits and combine them in a matter of time, maybe a matter of years. It will grow into millions. So it is advisable to remove greed from forex trading. Don't over leverage. Don't use lot size that is bigger than you, and don't have unrealistic expectation. Don't expect to make $10,000 in a day with a capital of $10,000. That is pure greed. You don't expect to make 100% in a single day. You don't expect to make 50% in a single day. So remove greed from your mind. Number 6, not understanding market uncertainty. The forex market is uncertain. It is unpredictable. Nobody knows what will happen. So if you fail to understand that the forex market is unpredictable, if you fail to understand the uncertainty of the forex market, honestly speaking, you are going to lose money in the forex market. You just have to believe that whatever money you place, that money is in a transit. You either make profit with that money or you lose that money. That is the surest part of it. You don't just place trade hoping that you must make profit. That is the mistake that so many traders are making, and that is why they keep shifting their stop loss, because they don't want to lose, or they keep shifting their take profit because they want to make more money. So not understanding the uncertainty of the market makes many traders to lose money. Some traders want the market to always go in that direction, and when the market is not going in that direction, instead of to close their small losses, they will leave it there and the losses will keep on accumulating. So it is always advisable for you to know that the forex market is uncertain. The forex market is uncertain. Anything can happen, right? So you should be able to understand this. Once you place a trade, just have it at the back of your mind that anything can happen. So have the mind to take whatever outcome that places itself before you. Anything that happens, accept it the way it is. Because if you're a forex trader, you need to understand that the forex market is purely unpredictable. Traders just use strategy to find an edge that will enable them to make profit. But that doesn't mean that their strategy will work all the time. Sometimes it will not work. Sometimes it will work. So you just have to understand that the market is unpredictable. It is uncertain. So that is why money management and risk management still play an important role in trading. So many traders, especially newbie or beginner traders, they fail in this business because they fail to understand the uncertainty of the forex market. They want the market to go in that direction. They want the market to always do what they want, forgetting that the forex market is uncertain, unpredictable. Number 7, unrealistic expectation. So many newbie traders are expecting something that is unrealistic, right? In a pair that is not even moving, a pair that moves at least 200 pips in a day, they will be setting their take profit to 500 or 600 pips, whereas this pair doesn't move more than 200 pips in a day. So you set take profit hoping that the price will hit your take profit. Unfortunately, the price can just move 150 pips and then reverse. So you have to have at least realistic expectation. When you place a trade, you should place your take profit at a point where you believe that the market can get to, so that at least you can make profit on that day. So stop making unrealistic expectations. Stop trying to make something that you yourself know is not possible. Some traders, they place 500 pips stop loss with the mindset that the price cannot go 500 pips against them. Not even trying to look at the kind of pair they are trading. For instance, if you are trading gold can move 500 pips in a day. So some traders will place 500 pips as stop loss with the mindset that the price cannot get there. Rather, if the price moves like 100 or 200 pips, the price will revise. But honestly speaking, if the price is in a strong trend, the price will cross that 500 pips. So you should always have this at the back of your mind. You should always have this at the back of your mind. You should always have a realistic expectation before you place a trade. You must think. You must ask yourself questions. So have that at the back of your mind. This is the reason why so many traders are failing. They have unrealistic expectation. Number 8, impatience. The major reason why so many traders are failing in this business is impatience. They are impatient. They can't wait for their take profit to be triggered. They cut their winning trade earlier. They cut their winning trade faster and allow their losing trade. So these type of traders are so scared. If their trade is in profit, instead of them to wait for their take profit to be achieved, they will close their trade in 10 pips or 20 pips because they are scared. They don't want the price to reverse against them and they will not lose their profit. And when the market is going against them, when they are losing, instead of them to close their trade, they will not. They will allow it. Instead, they will be shifting their stop loss, hoping that the market will reverse and break even. But unfortunately, the market will keep going against them till the account gets drained. So it is always advisable that you try as much as possible to be patient with your trades. Whenever you place a trade and you have a fixed take profit, wait for that take profit to be triggered. Always have that at the back of your mind. If you place a trade, always wait for your take profit to be triggered. So patience is very important in trading.